And if we do that as an agent and we issue a policy on somebody that can't manage $1, they're not going to pay premium. They're not going to pay the full premium. They're not going to pay loans back. They're not going to be honest bankers. They're going to steal peas, right? All the things that Nelson warns us about in the human factors is what's going to happen. Hello, and welcome back to the podcast. Thank you very much for being here. All right, today, Tarisa and I are going to talk about when is the right time to start a policy if you have debt. So because I mostly talk, and then Tarisa listens, and then she calmly steps in with a comment here or there. But this is basically a topic she wanted to have, and so I'm going to let her kind of take this over and talk about this and ask me questions about what I would do if somebody had a lot of debt. We talked a little bit about it before we got on, so I kind of have an idea of where she's going with it, but you guys know I don't plan. No, I'm sure Tarisa has in her head.
Yes, this is going to be fun because I think a lot of people have this question, and I think my personal opinion about this has changed the longer I've been in this industry. And part of that has to do with having your insight on things, honestly, because I remember when I was first reading Nelson's book and he was talking about how he started realizing how much money he was putting in his policies and that if he increased that in order to have access to more cash, in order to kind of consolidate his debt inside of his policies further, he was able to do that in an expedited fashion. So I remember when I was really new to the industry, I thought like, okay, it's not a big deal if you start a policy right away to recapture your debt or to consolidate it quickly. And I remember I was at a think tank, and I want to make sure I'm setting this up correctly. Someone basically said if someone has a bunch of credit card debt, they should start a policy first before they pay off that credit card debt. And you were very adamant that that was not a good idea. And I kind of walked away from that conversation confused. And I remember I've asked you a lot of questions since then, over the years, obviously. So I kind of want to get your input on why that is your opinion and why, like what you suggest for people before they get started with the policy.
Well, in that, there's multiple parts to that. So if you come to me with 0% credit card debt, I'm not worried about it. But when you come and you've got 20, 25, 30% credit card debt, interest rate on that, obviously, our policies are not making a 30% rate of return. They're not making a 15% rate of return. And so we cannot, and I've run the numbers, I cannot put the money through the policy to pay that debt off faster than if you paid it with cash. Now, that think tank that you were talking about, I almost lost my ever-loving mind on the guy that said that he was doing that. To the point where other colleagues were texting me and they're like, Mary Jo, is your head going to blow up? Because I was verbally not happy about it. And the reason that the guy stated he does it, and I don't remember if you caught that, but the reason that he stated he does it is because if we lose them now, they'll never come back as clients. So basically admitting we cannot pay that debt off faster if we run it through a policy first. He just didn't want to miss out on commission. And we have to look at somebody that's got $30,000, $40,000, $50,000 worth of credit card debt at 25%. Where did that debt come from? And so if people have a lot of debt, I want to know where. I want to know why. And some agents are scared to ask that question. I have had a lot of people tell me, you ask that? Yeah, I'm here to help. Like, why wouldn't I ask that? I'm not rude about it, but I want to know, is it because we had a lack of, did we lose our job? Did we change jobs? Did we start a business? Is that business startup costs? Where did the debt come from? Is it frivolous spending? And I will ask, is this frivolous spending? And if they say yes, then the next question is, are you still frivolously spending? Or have we stopped and we're paying the credit card debt off? Well, if we've made progress and we're paying it down, then great, fantastic. Let's keep making that progress. But I don't want to start a policy if I have to start a policy 2 years later, and it happens a lot. that I'll say, hey, I really like to see this credit card debt paid off first, and then we can start a policy. They'll come back in a year or two. Those are good clients. Those are people that really have got their finances straight. They quit this frivolous spending. They've got the business loans paid back, whatever that might be. But if you lose the client because somebody sees infinite banking and they're like, oh my gosh, this is the best thing since sliced bread. I want to do it. And they're so excited to do it. And if we do that as an agent and we issue a policy on somebody that can't manage a dollar, they're not going to pay premium. They're not going to pay the full premium. They're not going to pay loans back. They're not going to be honest bankers. They're going to steal peas, right? All the things that Nelson warns us about in the human factors is what's going to happen. And so I either want that credit card debt to be zero. So can we do a balance transfer and get that to 0% and really stick a lot of money on it and get rid of it? Do we have IRA money that maybe we want to just pay it off, right? A lot of people have credit card debt and then they're sticking money into their 401k.
Yeah.
That's silly because your 401k is not making 30%, right? You're stressed out about these credit cards. It's hurting your credit score. And you're still putting your 3 to 5% away in your 401k. It doesn't make sense to me. And so there are circumstances where I actually had clients 2 weeks ago or 3. They had like $30,000 of credit card debt. It was not at 0%. And I still started a policy for them because they had other money in other places that could pay that credit card debt off. So it really depends on the situation. But the majority of the time, you are correct. I will say, I don't want to start a policy until that's taken care of.
Well, and I think, like you said, it depends on the situation, right? Like if this person has no savings whatsoever and a bunch of credit card debt, it's like, okay, clearly this person isn't disciplined in how they're using their money. And I don't know why it sounds like so simple, but it took me a long time to kind of arrive there because I'm like, well, Nelson did it, so why shouldn't it be good for everybody? But it's like everyone's not disciplined with their money. So it's like you need to have the habits of a person who can manage a dollar before that makes sense for you.
Well, but Nelson talks about not stealing the peas.
Mm-hmm.
Nelson talks about paying yourself back. A lot of people think that, oh, Nelson said run all the money through the policy. But you missed 99.999% of the book, which also talks about human factors and numbers. Like you just saw, hey, let's stick as much money through the policy as we can. And as an agent going, oh, hey, that means that I can make more commission and I can sell more life insurance. And we also forget that Nelson said this is not a tool for life insurance agents to sell life insurance, right? This is a tool for life insurance agents to teach people the infinite banking concept. So I think we have to think about, we have to actually read the book, right?
Mm-hmm.
It's like somebody said to me, you can't just pick parts of the Bible out and say, oh, this applies. You have to know the context of what they're talking about and the whole Bible, right?
Oh, that's
and
so funny.
I was like, that's actually a really, really good point. And so it's the same thing with becoming your own banker. Understand the whole thing. Understand why in Life Without the Bank, we're talking about human factors. I didn't just decide, hey, I got nothing else to fill pages, so we're just going to talk about usage of money and storage of money and all that kind of stuff because, I just need to write a book. No, that's all there, and it's there for a reason.
I think part of the puzzle that I was missing was the fact that Nelson already had his policies started. So it's like he already had the habits of paying premiums and paying high premiums. So really all he did was look at what he was already doing to figure out what is the most efficient way to get out of the situation. And so in his case, it was putting more towards premium so that he could be more aggressive in his debt pay down. But I do think that having those conversations with you and realizing like, oh yeah, this is a human nature problem for me was a really big light bulb moment, which is why I wanted to ask you about this today, because I think it would be helpful for people listening to this podcast of being like, okay, if I'm in credit card debt and I want to get a policy started, and let's say I don't have any savings, maybe it makes more sense for me to be disciplined about that before getting a policy started, because you have to be disciplined to pay premium and to pay your your
But I
loans
think
back.
we also need to look at where else are we putting money, right?
Mhm.
So we might have high student loan debt as well. And student loans might be another one where the interest rate's not as high, but then it's a factor of, is your payment really high because you shortened how you're going to pay your student loans, or did you pick a long amortization on those so that we can run it through the policy first? Because and then it depends on the student loan debt, right? If it's 6 or 7%, I might say, hey, well, what else do we have going on financially? And so are we putting money to a 401k? Are we that we can, maybe you want to redirect that. And of course, we're not financial advisors, so we're not telling you to do that. But this 401k money, if you don't like it, and the majority of people that read the book do not like 401ks. And so we're putting money here, but can we put that money into a life insurance policy that we have liquidity of, that we can pay down those student loans? We can pay down those credit cards. It's crazy. These people that I was talking about earlier, they had money in IRAs. They had whole life insurance already that they had tens of thousands of dollars in that they did not know about until they read the book. Until I asked them to get all their financials, they were like, we had no idea we had this much money. So they had $30,000 of credit card debt, but they didn't know they had money sitting in all these other things that they could access to pay off those credit cards.
Nice.
Instead, they're paying for 2 years. They'd been paying this interest on these credit cards. They'd not charged anything. They'd got it down to $30,000. It was not there prior. And so they had got it down to $30,000 and they had done a fantastic job in the process. But what if I have an old 401k or IRA sitting there? Why would I have a $30,000 IRA that's maybe making 4 or 5% and I'm paying 6% on a credit card? And people are going to say, well, that's my retirement. Yeah, I know. And it'll still be there when you pay it back. So again, we're taught to segregate money, which is what I talk about in my book. Stop segregating money like all these financial advisors and talking heads are telling you to do. We have one pool of money. If we take $30,000 out of our IRA and pay off our credit card and take our credit card payment and pay ourselves back for the IRA money at 30%, okay, we're not going to give ourselves a discount. We're going to pay our $30,000 back at 20%. Do we have more money than we had before? Yes. We have all of our IRA money back plus 20% if that's what the credit card company was charging us. So you essentially turned your IRA into a 20% IRA. And if you want to put it back in an IRA, great, fantastic. Put it back into an IRA. If you want to redirect that into a life insurance premium, you can redirect that into a life insurance premium. If you want to put it in a savings account or a CD, fantastic. I don't frankly care where you put it. Let's just look at the basics of it, that a lot of times people with credit card debt don't understand we have other money that's making less that we could use, or what caused it? What were the human factors that caused us to have all the credit card debt? And are we doing a debt snowball? I mean, you and I, a couple podcasts ago, talked about Dave Ramsey, and I'm sure we will be crucified. But here's the thing. I really like 97% of what Dave has to say. I really do agree. And you as well agree with the majority of what he has to say. In fact, I just heard he's got a whole book on business, which I'm quite excited to read. It might be the first Dave Ramsey book I ever buy. Great businessman. Brilliant.
Yeah.
But why not do his debt snowball? Right? Like, he's got a lot of really good tools to get out of debt quicker. And I've learned from my clients that have a lot of debt that have had to go to like the debt consolidation or debt consulting companies. What these debt consulting companies do is they will do balance transfers to 0%, or they'll call the credit card companies on your behalf and say, hey, will you lower that credit card debt? If we give you X amount, will you lower it? Will you lower the rate? Will you do something, right? And you might have to call back 2 or 3 times. But they'll pay an enormous amount of money to these debt consulting companies to call on their behalf when you could just do it yourself. And there are so many good like TikToks and Instagram videos of people showing you how to do that online now. Like, I went on to TikTok the other day to see how to raise your credit score faster. Oh my gosh. There's so many people in that credit score world that have worked with these Experian companies and all these companies that will give you all the secrets of how to do it. I'm like, I had no idea. I mean, I've not really had to ever worry about it. So I haven't had to experience that, but it's such good information to have for our clients. Pay the 15th and then 3 days before your credit card is due. And then that like raises your credit score in no time. I had no idea. And so we have to look at, if we have the credit card debt, what's it from? How can we get rid of it? What are these tips and tricks we can use to get rid of it faster? I'm not a huge proponent of not paying for the debt that you accumulated and having the credit card companies write it off. But I'm also not a proponent of them raping people at 30% and 25%, because you and I legally can't charge anybody 20 and 25 and 30%, but they can, or your payday loan people.
That's the
So
worst.
do you have money elsewhere that can pay that kind of stuff off? So hopefully that kind of helped, but do we want to start a policy right at that point? I don't know. Tris and I will see.
We'll see. Yes. Yeah, right. And then I think my follow-up question to that is, like, let's say it's not credit card debt. Let's say it's a line of credit, or you're a business owner, or it's student loan, like student loan debt. How would you treat that differently, or would you? And is that based off of if that person clearly has a habit of being disciplined or not?
Yes. It's going to be based on human factors, because I can have somebody with a line of credit or a HELOC that they're using that HELOC to start a business and the business is making money. Then I'm not going to worry about the HELOC, because the business they started is taking care of that. But the human factor is, I have student loan debt, but I don't have a job and I can't get off the couch. Well, then we have a bigger problem. And it's not the student loan debt. Or I have a lot of student loan debt and I just want to punch the clock 8 to 5. I mean, I'm not here to criticize anybody for how many hours they want to work. I have a child that has told me multiple times, Mom, I was not created to work 40 hours a week. I don't know who created her. I mean, I do know God created her, right? But that's not what she learned in our home. And so she is just very adamant that she's not going to work 40 hours a week. And that's great and fantastic. But then you need to lower your expectations in life. And or maybe you need to be super creative to find something that makes you a lot of money in a very short period of time, right? It's possible. Everything is possible in today's world. But if you are somebody that just can't manage a dollar, and no matter what, you get that dollar paid off and you rack that right back up, we're not getting anywhere. And so we need to take a hard look at the human factors of what's happening. And I can typically tell just in a meeting when I talk to people what our energy level is for money. Like, I am very driven, not by money. Money doesn't drive me, but helping people does. And so I'm like, how many meetings can I have? How many people can I talk to? I mean, I was just talking to a friend the other day and she's like, Mary Jo, you need to make time to eat lunch. And I'm like, I don't have time to eat lunch. Like, I got meetings. And sometimes they go long because I don't want to cut somebody short and be like, oh, sorry, we're in the middle of something, but our time is up. And so I'll go a little bit longer, which should have been the time I'm eating. And so I just want to make sure that I can help everybody. And some people are just not like that. They're like, yeah, well, I'm okay. I'm fine not having all these people to help, or I'm fine not having the money and where I'm at now. That's great. I don't care. I'm not here to judge. It's just a matter of, if we have $30,000 in credit card debt, we got to get it paid off. And what are we willing to do that? Are we sitting on the couch? Are we willing to get another job? Are we willing to start a business? What are we willing to do to get ahead? Because remember, Nelson said, if you're going to do those things, you're going to beat your peers and you're going to be light years ahead. You've got to beat Parkinson's law.
Yeah, that's really important. And I think that's kind of been my journey of coaching clients too, is being like, hey, let's get this under wraps first. because if you have the discipline to complete this, then you're going to have the discipline required for this concept. And I think it's fun kind of seeing my own mind changing throughout those couple of years just based off of working with people and seeing it play out in real time.
Yeah.
So
And you'll have been at different agencies. I've worked with different agents. And we've both worked with different agents that really are driven by the almighty dollar and the commission. And you sell them the policy and you don't worry about how that's going to affect them in 5 years or 10 years. You just make them believe that that policy today is in their best interest. And it's not always the case. I will make no commission before I put somebody into a position where it is not going to be in their financially best interest in the future, tomorrow, 10 years from now, 20 years from now, whatever. If you need life insurance, there's always term. There's nothing wrong with term insurance for a purpose. And so you can always get some term insurance in the meantime. But yeah, I've had people call me and say, hey, you wouldn't sell me a policy. I had this happen about 4 weeks ago. This guy said, well, you wouldn't sell me a policy. So I went someplace else and bought a policy.
Oh, really?
And I was like, how are you paying for it? He's paying a $20,000 a year premium. I said, how are you paying for it? He said, well, I had to borrow from my line of credit to pay for it. I said, so you're robbing Peter to pay Paul. That's exactly why I didn't sell you a policy. And at that point in time, I was like, you are completely wasting my time. Not because he didn't buy a policy from me, but because 2 years ago, when I told him I'm not going to sell him a policy, nothing changed in those 2 years financially. Nothing changed in his attitude and his outlook for life and his willingness to change his finances. Nothing has changed. And so it still remains today. I'm not selling you a policy. Not only did you buy a policy from somebody else, you bought a policy that was all base. None of that went to paid up additions. So you bought the wrong structure and you don't even have access to cash value because you were so bound and determined you were going to do infinite banking.
Wow.
You could have just bought some term insurance.
Yeah, there's nothing wrong with term insurance. It's like if you're listening to this and you have a bunch of credit card debt and you're like, I don't know if it makes sense to get started. I don't have a lot of savings. And you know you need to have discipline around like how you're spending your money. Get a convertible term policy until you can convert that into an infinite banking policy after you've paid down your debt.
Yep.
So was he meeting with you to get another policy or to ask you for advice on the policy that he opened?
He actually brought somebody else to the meeting because he thought she should have a policy, but then he neglected to tell her what I needed and he neglected to tell me why he had the meeting. Kind of the story of this guy's life, just very unorganized, very...
Well, hopefully his policy...
I mean, the meeting was not in his favor because I really busted his chops about it. And I asked him at the end of the meeting if he was good or if I needed to continue busting his chops. And because you did it all wrong. So if you did it all wrong, you didn't listen to me, you didn't take the advice that I gave you, you haven't changed your human factors, you haven't changed your thought process, you haven't changed anything in life, you haven't changed your finances. And then you come back to me, what exactly do you expect? If he was coming back to Tarisa, it would be a different story, right? Because you would have been nice. But you're coming back to me. And I'm not going to mince words because at this point, you need to hear it. At this point in your life, for the age that this man was, you need to hear the hard truth because obviously everybody around you is coddling you and I'm not going to coddle you. If you can't manage $1, you can't manage $1 million. It is very simple. And so the fact that he went to a different agent that sold him the policy and did not ask him about his finances, did not ask, hey, you're going to have to borrow money from your operating line in order to pay premium, that means that he just didn't care, right? He does not care about his finances if he didn't care enough to do it right. And if you don't care enough about your finances, then I don't care to work with you. We only want to work with people that want to have a successful process. We don't want to work with people just to sell them life insurance. If that's what you want, there's all kinds of slimy agents out there. Like 95% of them are slimy, right? There are very few of us in this industry that are saying, hey, I will go without supper tonight because I don't think you should have a policy.
Well, it's doing the right thing. And I always believe that that comes back to you. And how I approach meeting with clients is like, how would I want my dad to be talked to by a professional or helped by a professional? It's like, you deserve that care. Everyone deserves that care. And if I screw someone over just to make $1, to me, I just think it's fundamentally wrong. I don't think people should operate that way. And I think you
Karma
should
sucks
care about, yeah,
because
you should
karma will
care.
come and get you. I mean, if you're the greedy person that's selling life insurance for that purpose, you're not going to be successful. My clients are my friends. I don't know them until I meet with them. But by the end of the hour and a half, I want to be friends. And so I don't want to screw my friends. I'm not out there to do that. I'm out there to make sure that they're taken care of. Because when I started in this industry, I started with a slimy agent who lied to people. That sucked because I thought she was being honest. And so I don't want to have to do that. Like I couldn't do that. It's just not my nature, but that's not everybody. And so if you want a policy, go get one. Just don't come get it from us because we're here to make sure we can teach you and we can help you and we can do the right thing. And if you come back 2 years later, fantastic. I had a new client last year that came back 2 years later and said, Mary Jo, I was really mad at you for the last 2 years. I'm like, why? What did I do? It's like, you told me I couldn't afford a policy. I'm like, well, you couldn't. But what did he do? He got all the steps in order. He did everything he was supposed to. He had more money. He paid off some debt. It was great. The other guy didn't do anything. And we're still a victim.
Yeah. You want someone to be in a good position before they get started. And that requires asking a lot of questions and making sure that you have a good understanding of what their financial picture is. And just being honest if they're in a situation where they shouldn't be. Like there was a lady that I met with. I've been meeting with her, honestly, the past couple of years, and she had a ton of credit card debt because she lost her job. And I was like, hey, look, you need to get this kind of taken care of before it makes sense for you to get a policy started.
But it's good for us to give them the tips and tricks to do that. Are you going to transfer it to 0%? Are you going to call the credit card companies and say, hey, can I reduce this? Can you reduce this? I had a loss of income. I don't want to file bankruptcy. What can we do to help here? Because in those situations, it literally was her losing her job. That's a hardship. And credit card companies will typically help you if you have a hardship because they don't want you to file bankruptcy. They don't want to get pennies on the dollar, and so they will do something to work with you. And you call back until you find somebody that's willing to care and you be honest about your story. Great, fantastic. Let's get ahead. So a lot of times I'm just saying, hey, maybe you do need Dave Ramsey. Maybe you do need Debt Snowball. Maybe you do need these tips and tricks. And then we can come back because at the end of the day, it's you becoming your own banker. You can't own a bank if you don't understand how to run the bank. If you're not a good business owner, you can't own the bank. You can't own a grocery store. All of the stuff Nelson talks about in the book. You cannot do that if you are a lousy business owner. And so you have to get your business hat on. You have to get your banker hat on. You have to get your lender hat on. You have to put all those hats on. And you have to be all of those people. And that is just not meant for everybody.
That's true. Well, I think that this was really helpful for me and for everyone listening about what the approach is to particular situations with debt. So thank you for always giving me good things to consider.
You're welcome. All right, guys, you know where to find us. withoutthebank.com. Grab your book, set up your appointment, email us if you have questions, Mary Jo at Without the Bank or Tarisa at Without the Bank, and you'll find us there. You have a fantastic rest of your day.